that is being taken back by the markets. Nothing to be worried about. Nifty Bank 50 points lower, Nifty 50 71 points lower. This is a consolidative phase in which the Nifty is moving, and no better person than Mr. Sunil Subramaniam, a market veteran who joins us in market today, is with us. Namaste Sunil ji, a very warm welcome. Much of the pain seems to be out of the system as far as the sell-off was concerned. A record high on Nifty small cap and a mid cap index. How do you see sentiment on the Dalal Street, sir?
Domestic mutual funds and DIIs are buyers. Adjusting the low GDP data with RBI coming and downgrading the GDP, but a positive 1.5% rise expected in next quarter's GDP. Has put 6.8 at 5.4 previous quarter. So that, if it actually turns out, will mean that you will get an EPS up guidance in January. But hesitant to take a call on which sector would benefit, because the effect of a good monsoon is yet to feel itself on inflation. You know, it's a very strong thing that normally a good monsoon means softer inflation. But contrary to that, we have had a very good monsoon, but also food inflation high. So coming to terms with that, I think it's going to take a bit of understanding and time. The second aspect is that FIIs, after selling over October and November, have come back in December. And it's about 20,000 crores from what I saw that they turned around. Now, this is probably because the correction in the market meant the valuations got a bit more reasonable. But I don't expect this to sustain over the next couple of weeks because it's holiday season. People are already going to be off for the Christmas and New Year vacation. So there will be thin trading from the FII counters for the next 2 weeks. So I expect a consolidating market over the next month, I would say, till the January earnings season kicks off and demonstrates that the GDP is actually coming through better.
Good afternoon to you, Mr. Subramaniam. Good to have you with us. Let me start off by understanding any key triggers that you're spotting. You know, in the absence of that, the markets have turned increasingly more volatile over the last few days as well. And today, you know, when it comes to the upcoming Q3 numbers as the next major trigger that could probably come into the markets, the Godrej mid-quarter, update was definitely not on the strongest side. That pulled down the entire FMCG sector lower. First up, what is your expectation on the FMCG space? Q3, what is your expectation? After a muted Q2, do you think some kind of an uptick could be seen?
In the FMCG space, not yet. Because I think they are going through what I would call as a reasonably double whammy. So what do I mean? At best of times, FMCG is a safe sector, consistent 7 to 8 to 9% top line and bottom line growth is why they are darlings of the FIIs because of the consistency in their earnings, right? But how does that actually happen? Is because they generally have pricing power. When commodity prices increase, they are able to pass it on in the biscuit price increase or the shampoo price increase and so on and so forth. But this time around, what's happened is that the inflation has hit the consumer too. Because food inflation, for example, wheat goes into biscuits, right? So the inflation has not only hit consumer demand, because when your consumer surplus gets reduced, you will postpone the purchases of certain things to the extent that you can. You'll make that toothpaste last a couple of weeks more, right? So in the absence of that, in the demand not shooting up, in the food prices like the wheat prices or palm oil for soaps, right? Multiple input costs for FMCG have gone up, and they are not able to raise the prices. So what was earlier an easy pass-through mechanism today looks a bit dodgy at this point in time. So I would say that, and FIIs also are being cautious. See, generally, it's a significant part of the large cap index, and FIIs like the consistency. So when they are seeing this happen, I think they're taking a bit of money off the FMCG table today. You saw that and hence we will now have to probably wait for inflation numbers as they come forward to show that the monsoon effect is seen and food inflation starts declining. Second, you got to wait for the guidance from these companies in the January 10th onwards to say, okay, this quarter was bad, but how is the outlook looking? So I think given all of that, at this point, since they don't have pricing power to pass on input costs, it's better to wait and watch an FMCG space at this point in time.
That's a very good assessment on FMCG, and as Sakshi has been pointing out since morning, a lot of selling pressure has emanated in the sector. Dabur, Marico, and all started with Godrej Consumer Products, whose business update was taken by with a bit of a shock in the market. That counter is down 9%. It pointed to a margin squeeze. It pointed to slowing top line, and of course slowing profit after tax as well. Sunilji, how are you seeing this entry of new IPOs? Now LG is in the offing as far as market is concerned. Of course, this is something that we have been watching for the past 25 years. Is this a good development that Korean giants such as Hyundai and LG are just floating OFSS and taking money away from the Indian markets to this trend?
See, two, three things here. One is that it's good that large companies in the market, in the general market, are coming to the stock market. Okay, liquidity. We are so far. If you remember historically, Maruti was the only representative of the auto sector. So everything was focused on that. The more the companies come and get listed, the better price discovery happens. So it's generally a healthy thing for the market that these companies are listed. Second aspect is that these issues will be a success because the FIIs from those countries themselves subscribe to this. Because for them, buying a Hyundai in India is better than buying a Hyundai in Korea. So you'll have Korean FIIs or Japanese FIIs come in and buy their company. So these issues will go through, right? But like you saw in the Hyundai, retail participation will be hesitant. Why? Because this money which they are raising is not being reinvested in the business. I have a very simple thumb rule on IPOs. Companies raising money for its own business is very different from that which is seeking to pay off its earlier investors, in terms of profit booking. I'm not saying those kind of shares will not go up. If their business goes up, of course they will. But the immediate thing is that these people are actually booking their profits because they see the valuation in the right space. And if you see the overall IPO pack last year, you would have noticed that promoters had been increasingly booking profits and reducing the stakes because all of them were feeling this good to be true. It won't last. So let's make money while. That's the only small list of concern in terms of these issues being timed at this point in time, that they are saying it's a good time to make our returns on our investment into India years ago. So from their point of view, it makes perfect sense. It's good from an overall stock market that these companies come into the listed space. But right now at the IPO, unless they price the IPO in which the domestic retail investor can make money. If you're trying to take off all the future earnings that's there in the listed price, then I'm not sure that they are issues to be subscribed to now. Rather, you wait for their performance post-listing, see how they pan out, and then take a call. They're good companies about that, there's no doubt, obviously. But when do you invest in an IPO at this point? My sense is that choose companies which are raising money for their business purposes as opposed to cashing out of the promoters.
Important point right there, and we'll keep that in mind right there too. And this will be an interesting space to watch as more details unfold from the IPO and the RHP that follows after the DRHP as well. That's something that we will also get more details from. Apart from the IPO space, also to get in sense, since you were talking about how FIIs are finally, looking at India favorably after having sold off over the last, 2 months or so, an exodus took place. The key segments, you did talk about some of them which are preferred ones for the FIIs. Let's talk about the heavyweights, IT and the banks, for instance, as well. What is the kind of sense that you are holding on the banks and the IT space particularly? Financials have been a key consensus play for most of the analysts thus far. What is in the offing? We've seen HDFC Bank come back to record highs, so that's the private sector boom coming in. PSU banks, after disappointing over the last few consolidation months, are now also coming back in flavor. IT, on the other hand, there is a lot of US overhang yet again with Donald Trump's coming over and taking over the office too. So how does one really approach these two spaces?
In fact, leaving aside today's marginal correction in these two sectors, they're two of my top picks from a 1.5 year to 2 year perspective. Okay. The reason I say is, it's clear. You mentioned Trump, and then the Trump thing is the fact that US economy itself is showing strong gains, regardless of Trump coming and supporting. right? And if you see then that with Trump also inclined to be soft on the taxes on the corporate side, the profitability of US companies go up, then they will invest in IT. And I think Indian IT companies have gone way past those days of the call center and those kind of a cheap outsourcing to value-added IT consulting work. So I am second aspect is that the strength of the dollar, because you see one of the things to remember right now there's a Trump trade going on in the dollar, but I don't think this is going to just stop, because when Trump puts tariff, this is a slightly nuanced view that I'm giving. When Trump puts tariffs, right, he has to fulfill the election promise. But the immediate impact of that is that inflation is going to rise for the consumer there. If inflation rises, then the Fed's chance of cutting interest rates goes that much down, which means that with higher interest rates, the dollar will continue to be strong. And if the dollar continues to be strong, the rupee will have to weaken. It may not weaken more than other emerging market, or it may be strengthening relative to emerging market, but it's still net weaken vis-a-vis the dollar, which means that the rupee earnings of IT companies are going to get a boost, right? And the return of the FII. Now, FIIs get a great level of comfort from IT, because that's one sector where information is clearly available, but they are easily able to counter check the information with the buyers in the US stock exchange, because they have very good relationships there. So that comfort in terms of the consistency growth of these companies is much higher. So, and given the fact that FIS just started coming back, I expect mid-January onwards. I think the next month you give it a break because they are on holiday season. They'll come back in the first week of January, then redeploy. From mid-January, I expect a strong return of the FII. And when they come strongly, the passive funds have to buy the index. And there, if you see, IT is a significant component. So I believe that though IT has run up quite a bit on all of this news, I believe that the business prospects of IT with US corporate earnings and corporate businesses being on a good wicket is good news for the IT sector. So I will continue to be, I think over the next year and a half, it's a good sector. On the banking and financial services, some part of what I said holds true to the extent that they are a big part of the large cap index. So the return of the FII means automatically passive money will flow in. And I think BFSI is about 30-35% of the large cap space. So that much buying support is going to be coming in when the FIs come back, number one. Number two, right, you're seeing that from the earlier governor's speech, the CRR rate cut obviously gave about a lakh of crores of additional lending, but the pressure on the margins, right, now you have deposit rates and credit rates more or less matched at about 11%. So the pressure is not there. So this money which they get can easily lend. So the lending cycle looks good. Second is, RBI governor also mentioned that the health of the banking sector is on top grade. You'll have to take his words there. Then the third aspect is that I see that the next year is going to be driven by two key things. One is consumer discretionary growth, right? With the K-shaped recovery in the consumption going, I think that will sustain. And the second is the capex cycle. With the government restarting the capex program, which went on a back burner for the last 5 to 6 months. The next few months they will restart it, and then private capex coming back. Corporate lenders are going to have a very good time, because, and the public sector banks would slightly have a tilted advantage, because private sector banks tend to be more retail oriented, public sector banks are more corporate oriented, so they would tend to benefit. And the third aspect of the banking space, I would like to extend it to say BFSI. For the right hand side, the wealth management firms, the stock exchanges, the broking firms, the asset management companies, and the insurance companies. I think with Indian capital income now touching $2,800, that incremental surplus is going to be sent into the savings stroke investment bucket, and I see good times for that side. So I think BFSI would again be a very strong pick for me. So IT and BFSI are my two top picks.
Right, ladies and gentlemen, 250. Let's just take a detour into the market. So far, it's the IT space that is in the green. The index barely managing 55 points uptick. It's a sideways trend today, and there is nothing much that comes out in trade except for maybe record highs on the small cap index. The Nifty Metals Index is the top gainer, 0.4% higher. This is the strength that we had referred to on Friday in our closing commentary. You'll see a lot of hectic activity coming that side. Jindal Steel and Power 1.6%, 1.8% higher, 966.8. You have strength across the board when you see the F&O space as far as metals are concerned. Hind Copper up 1.4%. You have a strong move coming into counters such as Steel Authority 2.1% higher, Tata Steel 1% higher, NMDC and JSW Steel also in the green. So these are the counters that are doing pretty well here. And the early morning burst that we had seen in CEAT has also helped a lot of tire companies come up with very sharp gains. Look at JK Tires up 6.8%, a strong move coming into Balkrishna Industries as also Apollo Tires, and the news driving CEAT of course is its acquisition of Michelin. CEAT at the moment is up 11%, and when you look at the top traded list, CEAT is at the rank of 4. About 1600 crores worth of shares have been traded on CEAT. That's how the mood is in the market. Sakshi.
Okay, got that. Mr. Subramaniam, another space that we'll draw your attention to, again from the export-oriented spaces, is the pharma space. How are you really looking at this?
With the divide between export-oriented and domestic. And in domestic, you have hospitals, diagnostics, medical tourism. So I domestic is on a good wicket. I think post-COVID, you've seen a sharp awareness of things, and people are now quickly going to hospitals thanks to the insurance penetration. So that's on a decent, strong, sustainable wicket. But on the international front, what I said on the IT holds true here. That is, dollar strengthening, rupee depreciation helps the export-oriented pharma companies, part of which is in the price. So that's one story which I would think will sustain. But more importantly, on a longer-term story, there's an interesting play which I see happening, which is that the China play. And we all know about China plus one, China plus one. I'd like to give a slight twist to China plus one as China plus one plus one. Hello.
Okay.
So what do I mean there? You see, the first part of the China plus one, we are substituting China, right? But the China plus one is something different, which I see playing out and what to patiently see this space, which is that with 60% tariffs being hit on China, but only 10% on countries like India, China is not going to sit down like getting it lying down. So I see that, and you can see the political things on that already, right? I see China actually using India as a outsourcing for API and other stuff, and to some extent finishing the product here so that it gets exported into US as made in India, but with the APIs coming in from China. So if the government is able to use the PLI scheme well and smartly, and I see green shoots of that in two things. One is, if you notice, the government has relaxed visas for Chinese engineers and Chinese technicians to come into India for China-related ventures. Second is the LAC-related Gadbandhan or whatever, calming of the waters there, right? So I think that you will see that increasingly the opportunity for India lies from taking manufacturing from China. And bear it in mind, China's technology and manufacturing production skills, everything are far ahead of India yet. So to the extent that India ties up with China, it will help improve our productivity over a period of time, but also to circumvent whole Trump. And Trump needs to put this because it was an election promise. At the end of the day, he's not going, he will turn a slightly blind eye to this kind of a routing, because end of the day, he doesn't want inflation for the US consumer to go up. So I think cards played smartly by India with China, which I already see the green shoots, will lead that in pharma is a big space, where in the API space and everything, India's PLI can give a big boost. And Indian companies which get into that space, tie up, use the PLI smartly, I think are good. So from a medium term, I think that's the way it will play out. And so I'm bullish on the pharma sector from a medium term perspective, despite the recent rise.
2:55, ladies and gentlemen. We have about 35 minutes left as far as market is concerned. It's turning out to be an okayish kind of a consolidating day. This will be the right time to also look at stocks that have hit record highs, and some of them which have moved with a lot of volume. In terms of all-time highs, CEAT is the new addition. Chalet Hotels 4% higher, 937. A good move coming in on something that Vineet Bolinchkar talked about when it was at 6% higher, 85. And you have the usual suspects whom we talk about on a daily basis, which continue to add more flavor, more strength, and more admirers to their all-time high. So Bombay Stock Exchange, CDSL, HDFC Bank, Coforge, Dixon, what are the names that we've been talking about, Policy Bazaar, EID Parry. These are, look at how sharply Trident Limited has moved, 11% higher, 38.2 rupees, 19.7 crore shares have been traded, which is 42 times the 5-day average. Look at how Welspun Living is moving, 173.8, 6% higher, about 1.33 crore shares have been traded, and of course this is 7.6 times. You have many other companies, Alok Industries in this space, Vardhaman Textiles we've marked repeatedly, 5.24% higher. These are the stocks that are moving with great strength and great conviction after the problems in Bangladesh as far as their textile part is concerned has given way. What else? See, ITI 2 days ago, again you have a 14 percentage point uptick. Remember, on Friday the counter rose 13% but hit an upper circuit of 20% earlier. It's the highest traded counter today, 3054. A strong move coming into compatriot MTNL and several other telecom players as well. But these are some unusual names that are moving today. You have in the form of another stock which is doing pretty well is the AMC space, NAM India, UTI AMC, Aditya Birla Sun Life AMC. All of them are in a nice uptrend. Sakshi.
Okay, let's get back to our conversation with Mr. Subramanian then. Sir, any key stocks that you have probably identified over the last 4 or 5 weeks of consolidation where you're adding afresh any positions? That's what investors really need to know.
I know that, but unfortunately SEBI regulations don't permit. I've accepted independent directorship in AMC. So okay. I'm governed by the SEBI regulations, so I can't use stock specific.
Any idea that you could suggest that, where are you going to be deploying fresh funds in terms of, key sectors? Now you did talk about 2 of them, which are your primary, top performers like, BFSI and IT. Apart from this, within the broader markets particularly, if you could highlight.
I think consumer discretionary is a big space, and I defined in a very broad manner to include real estate, auto and consumer durables within the consumer discretionary space, right, and high-end retail. So I think that's a very good space which I think has got good potential.
Okay, got that. Well, we'll thank you, Mr. Subramaniam, on that note for sharing these wonderful insights on the markets with all our viewers. All the best to you. Hope you have a fantastic time till the time we meet you next on Business Today Television. Thank you so much for being with us. Viewers, what we'll do is we'll quickly look